Hello, good afternoon. Welcome to Funds for Change. Please join us in the circle stage and be seated. We will start after 30 seconds of introduction, just for people to get a seat. There are plenty of room here. So we have a very interesting program today. More than 2 hours of speeches, panels, and the very famous now reverse pitch session, where we will have 15 GPs, global GPs, that will join us on stage and deliver their pitch on their most brilliant ideas on impact investing. So a few words on me. So I'm Emmanuel Parmentier. I'm a managing partner at INDEFI. INDEFI is a strategy consulting firm. We work with asset managers, we work with asset owners on their strategic topics, projects. And I created 13 years ago, so in 2011, our sustainability or sustainable finance activity. So 28 consultants dedicated to help asset managers, asset owners on sustainability. But enough about me. I will be your MC for the first half of Funds for Change. And then my colleague, Imen Marzi, will be your MC for the reverse pitch session. So let's start with the panels. And I invite on stage my two first panelists. So allow me a few words of introduction. So we have here Adeline Lemaire. Adeline, you work at Bpifrance. So for the international audience, it's the French public bank. And you are an executive director and head of funds investment.
That's right. Good afternoon.
Good afternoon. And Charlotte Virali, you work at SWEN Capital Partners, which is a pioneer private asset management platform dedicated to sustainable finance. And you are an investment director for an impact investment fund called SWIFT. Welcome,
yes.
Charlotte.
Good afternoon.
Good afternoon. All right, my first question is for you, Adeline. We will talk today about the difficulties for LPs to invest more in impact funds and the challenges faced by GPs to fundraise impact funds. So first question for you, Adeline, is at Bpifrance, how much do you invest in impact funds? How many do you have? What type of fund do you seek currently? And then we'll talk about the future.
Sure. We invest mostly into French funds, but also with an international angle. And we cover all strategies from seed to turnaround in VC and private equity, small to lower mid-cap. So we have, over the years, heavily invested into impact investment funds, seen as such. And I'm happy to further discuss what that means, what that entails. But we don't have a specific allocation dedicated to impact investment funds. With the utmost respect for fellow LPs who work that way, I don't really see it working. If you have a minimum amount that you want to dedicate to impact funds, people might want to question whether the investment decisions were really taken on pure business terms, if you have a minimum to achieve. And then if you have a maximum, it can also be seen as a sort of philanthropy pocket that you absolutely do not want to take to a higher stage, and the rest of it is going to be performance driven. The way we see impact investment funds are funds that have the same approach to financial and extra financial performance. And well, happy to further discuss and see whether we share views on what that means, but it's a prerequisite for us.
All right. So you don't have a specific allocation for that, but you do track impact investment funds, right, in the portfolio. And can you just give us a sense of how many GPs or the amounts, mostly French, from what I hear?
Mostly French, but also more and more international. We've invested, it's been, even before Bpifrance was created 11 years ago, we've supported the pioneers in impact investing, the likes of Citizen Capital, Altor Equity, Impact Partners. Some of them are here today. The way we saw it was for funds who took to the same level financial and extra financial performance, aligned interest with a minimum of having 50% of the carried interest linked to extra financial performance, and of course, intentionality, measurement, and alignment. We talked about that. So those were really the main definitions. But then what we saw is the movement growing and growing, going from private equity to tech, and having more and more tech funds incorporating that impact investment approach. This is definitely a trend, and this is something that we want to keep on supporting. But beyond purely impact-focused funds, we also want to make sure that the market overall, even for funds who do not label themselves as impact-driven, integrate in the closest way possible impact values and the support to decarbonize the economy and integrate also climate change.
How do you do that? How do you influence the ecosystem of generalist private asset funds toward more impact?
Well, it's both things, really. It's having stricter requirements when we invest, and it's also providing a lot of support, acting as an operating partner to the GPs that we work with. So we've provided a lot of support with publications, events, training sessions on how to integrate the climate approach at all the different stages of the investment process. And then there's what we require when we invest. When we invest into a fund now, for tech buyout funds and private equity funds, we require the GP to commit to, for whichever investment that they will be making, have a carbon footprint at the start when they invest into the company, measure it along the way, define a very clear net zero path for the portfolio company, align also the management package to the carbon indicators that will be set for the specific company, and of course to have the same type of measurement when they exit the company.
Okay, and do you feel it works? I mean, do you really see an
It's starting.
Yeah.
It's starting. It's starting. We have a lot of conversations with the funds. None of them now refuse to take on that commitment. I mean, that doesn't exist
never refuse
anymore.
Something from
right? Some of them do, right? But now I've lost my thought, Emmanuel. No jokes on the panel. Yeah, so it is working. It is working. It is starting. It all depends, of course, on the size of the management company as well. And we do acknowledge that for smaller size GPs who do not have an ESG officer, who do not have the equipment that's necessary to professionally address this, it's still there's still some way to go.
All right. Let's move on to you, Charlotte. So could you first explain what is your investment strategy?
Yeah, sure. So our investment strategy is called SWEN Impact Fund for Transition, also well known by some of you with the nickname of SWIFT. And basically, our strategy is to invest mainly in the renewable gas sector, biomethane, hydrogen, and hydrogen derivatives, which can be basically clean fuels. And the rationale behind this is to invest in what we call the hard-to-abate sectors. So when you talk about the energy transition, the easier thing to do is to go for electrification when you can. So you electrify all usages that can be, but some of them can't. For instance, if you take large planes today, you cannot electrify them yet. Maybe in the future, you don't know. So you have to go for sustainable fuels. And in order to do that, you need to develop new products. And those new products, such as sustainable aviation fuels, for instance, they usually derive from clean gas, such as hydrogen. So this is the rationale for this strategy that was created in 2019 by SWEN and was quite a pioneer strategy in that sector.
Can you tell us more about the first fundraising? So back in 2019, different period from now, right? But did you face some obstacles to convince LPs about your strategy?
Yeah, sure. So back in 2019, it was different times, of course, but we faced the problem of a first-time team, first-time fund,
Okay.
Where it's always more difficult for those teams to get financing, even though they usually have very good performances when you look at statistics. Also, there was a bit of pedagogy to be done with the LPs, given that our strategy was quite a pioneer one. And biomethane, for instance, is not very well known by most of the LPs, and therefore we need to explain what it is for, and why we believe it's important to develop the technology. And for our second fund, we have increased or developed the strategy and included hydrogen as another type of renewable gas and hydrogen derivatives as part of the strategy.
All right. And so how did you differentiate yourself from the rest of the impact funds? Because I guess that from an LP perspective, there are plenty of impact investing strategies, and it can be very difficult to choose.
Sure, it can be difficult. I think we have both the advantage and disadvantage of being in quite a niche sector.
Yes.
It means we're specialists in what we do, which is very appreciated by the LPs. And we are a team of people who come mainly from the industry and therefore very much are into our products. At the same time, those are products that are not very well known, as I said, by the LPs, and therefore it needs a bit of pedagogy to explain what it is for and why it's useful and why it's important to do those investments besides investing in electricity renewable generation. And
so now that you have several years of history and background, so what type of performance indicator can you send to LPs explaining that, yeah, it works, my strategy?
Yes, so now we have about 5 years of track record on our Fund 1, and we have 2 years in our Fund 2, and we can show to our LPs that the performance is there. Financial performance, but also impact performance is getting there and can be measured now. And this is very important because sometimes LPs have the impression that the fact that we are impact means there will be less financial return than for non-impact funds, which
is it the case?
Well, it's not, and that's what we can prove thanks to our track record, which clearly is an advantage today.
Okay. What do you respond to that, Adeline, on the performance discussion? Do impact funds perform less, according to your stats?
No, it's really the key issue. I wouldn't say that. No, impact funds do not have a performance that is less performing than other funds when you compare segment by segment. So I think actually what we need is to look, I think, the other way around. It's like extra financial performance is supposed to bring added value and an increased financial performance. So to really make the case to mobilize more LP investments and have them flowing into impact-driven funds, I think GPs really now need to make the case and show data that proves that the impact approach has been a value driver and has created, in the end, an increased financial performance, both for the companies, its employees, and the GP, and of course the LPs in the way. That is what is going to drive more and more LP interest into this thesis.
Okay, and do you think that the GPs are delivering this, so this type of measurement on interwoven impact and financial performance, or at the moment it's still lacking some good examples?
Yes, no, more and more so. I think what we've been lacking for the time being is a statistical depth and historical perspective. But now it's been more than 15 years since we've had impact investment funds, at least here in France. So we're able now to prove that along several cycles. So.
Okay. And so do you expect on the pure impact performance now, let's setting apart the financial performance, do you ask for specific KPIs or specific reporting for these impact funds to prove their their impact strategy, and how do you, consolidate that? Is it possible, or do they all have a different, set of KPIs?
Yeah, I think I've been in impact investment in emerging markets and developed markets for a long time now, and it's always been that dream to have a one-size-fits-all, to have, like that one indicator that could embrace what the whole market is doing. I'm not sure that is really going to happen. We can talk about impact IFRS or ESG IFRS. Those are interesting conversations to have. But as an LP, the way we approach it is that we reckon with the fact that each fund, because of its specificities, one is going to be more socially driven, one is going to be more environmental driven, and that's fine. I think we need all of that. But each of them is going to have its own methodology. As long as the methodology is professional, robust, proven by a third-party approach, that works for us. We have the capacity to accept that, and then to aggregate different indicators that will be coming out of those funds. But I don't think we want to enforce into the market one way, one set of indicators that could work for everyone.
And what about you, Charlotte? How do you prove your impact strategy and that it works and you deliver this impact?
So our fund is dedicated to the energy transition and climate change. So the key metrics for us is the tons of CO2 avoided thanks to our investments. Obviously, we can monitor many other KPIs, and we do. However, we believe that what really makes sense in the end is an indicator that is pretty much universal across all our investments is this one, the ton of CO2 avoided per energy produced. However, obviously you need to tailor-made a little bit that depending on the company you are investing in, and you cannot use that necessarily for everything.
All right. So we have 2 minutes left, more or less, 3. It's great that you bring forward very positive examples of an LP, a GP that have successfully invested in impact, raised an impact fund, but it's fair to say that in the market, it's not really what is happening right now. LPs have difficulties to invest more in impact funds. GPs have difficulties to fundraise. So any advice that you would give to the audience and call to action on how to successfully create a program or strategy to invest more in impact funds? Maybe Adeline, you want to start? Any advice for fellow LPs?
For fellow LPs?
Yeah.
I think it's really look at the performance and then look at your DNA. I mean, different LPs might want to have a very specific approach because of who they are, because of their background, whether you're an institutional LP or whether you're a corporate. So really understand the needs of what you want strategically. You might be more climate focused, you might be more social inclusion focused. So know what you want and then be very selective. Be very selective and invest with the ones that are going to work. Yeah.
Okay. What about you? Do you have comments?
Yeah, I think in order to make impact, you need to invest in people who know what they are talking about. So I would say look at the strategy, of course, but look carefully at the team and why the team is here and what's the background of the team and its track record. Because you cannot achieve impact in a dedicated area with professionals that do not come from this dedicated area, I believe.
Okay, so the team, the intentionality, I guess, is a first criteria.
Exactly.
Should be, at least.
Should
okay.
be.
Any recommendation for GPs now to successfully fundraise? So what's the secret recipe to achieve a fundraising of an impact fund?
Yeah, well, don't be afraid to very clearly explain your strategy, your intentions, and also I would say be clear on what your targets are and how you're going to measure them. We're back to KPIs. If you swamp LPs with so many KPIs that at the end of the day they don't understand what's happening, it won't help. I think it's better to focus on one criteria, one goal, and achieve it.
All right. Adeline, last word for a piece of advice for GPs.
I think make your case, make your impact case, make your business case, performance-wise. But then that would be the same advice that I would give to non-impact investment funds. In this fundraising environment, diversify your LP base. Go abroad, chase international LPs, chase different types of LPs, corporate, families, just, expand your horizons.
Thank you, both of you. I think we're perfect on timing, right?
Thank you, Emmanuel.
You will be there, I guess, just after for the networking part. So for the audience, you can ask your question directly. Thank you,
See you
Charlotte.
later.
Thank you, Adeline.